Hello everyone, it's Sam Wong again. Thank you for your support for all the times in the years for my YouTube. Have been really busy, but I think it's a good time to talk about what's going on. And Chinese New Year is coming in the next 10 days or so. So it's good to talk about what the year of Dragon looks like and how things shape up this recent month. Um, s- so the market outlook depends on the macroeconomic factors, which is really the interest rate cut because a couple of banks have announced layoff. So you really giving a signal that, while you hear a lot of good news of strong momentum of U.S. economy and certain concerns, depend on which aspect you're looking and where you are. But you really interest rate rises really make bank more difficult to do business with, and also getting small business hindering the growth of them and be able to survive in this in this inflation environment. The good news, however, was last Friday, the inflation indicator had provided that it had really dropping down quite a bit compared to the peak of March 2021. So, excluding energy and food components that tend to be more volatile, the closely watched core PCE price index rose 2.9% annually. So it's not too bad. Hopefully, we all get a raise at least 3% this year as well, just to catch up inflation. So the December job opening market turnover survey also will be released on Tuesday. There will be a report talking about demand and supply imbalances in the labor market, and whether recently, you have been doing at job 216,000 jobs in December, and unemployment rate is 3.7%, which remains very strong. And other than macroeconomic factors, we will have some companies announcing earnings. Microsoft, Alphabet, Starbucks, General Motors, JetBlue will be on Tuesday. Earning from Apple, Amazon, Meta platform, Shell will be Wednesday. And oil and gas such as Chevron, Exxon will be announced Friday. So obviously the fourth quarter normally a little weak in the energy industry, but it will be all depends on whether you beat the forecast or not, and also the forward-looking guidance. So I'll touch base a little bit on the Tesla. What is the forward-looking of the revenue guidance going to be in 2024? So we can put all 2023 behind. Look at the before getting to Tesla, I want to quickly capture the index. So for young people, I think really I highly recommend it. If you don't go into specific stock, have a passion about the stock and don't know what to invest, looking for long-term investment, you probably the index fund will be really good pick for you, and especially even S&P 500 index fund or Nasdaq, which you have to bear in mind. Nasdaq does have a high, down more volatile, probably based on high tech and startup company how they perform, and Dow Jones Industrial Average. Back to my time, yeah, I was told from my advisor, finance advisor, that it's about 12% in return in 20 years of Dow Jones Industrial Average. When you look at it, Nasdaq maybe perform similar, like 13%, a little better. Um, but then these days, though, things are a little different. So the last few years during the pandemic to now, you compare the index performance, they're definitely better than 12%. Of course, historical performance is no guarantee of future return. I got to talk about that disclaimers. So, for those of you who watched my video from previous one, you will notice that there was a 37 lush at Dow Jones. Apparently, this is really hitting another top side, and really 52 weeks or even all-time highs now in Dow. As well as last that you have actually beat my forecast of where I was in my last video and performed even better. So we'll see how these high-tech performers shaped up in the coming week for the announcement, and see how things go. Also, looking at whether, the market speculating whether really the interest rate cut will be happening in March this year or not, which is close to the election time, right? And it's very sensitive subject to drive how the future growth going to be, and whether the stock market will be one of those area we're going to get benefit from. So, and then the next thing I want to touch base on is this stock. I mean, I don't know if you can guess from the graph to know which company this is, but but obviously this is really Tesla. So Tesla has been dropped below $200 recently. The consensus of the 25 analysts covering Tesla for fourth quarter earning really fall below 3 cents, which is not bad at all. The stock is providing guidance of 2024, which is actually growth and continue to be growing in various space, and they will continue to utilize AI technology. I personally think this is a good price to buy. You may can watch a little bit, when the day there's another bad news or something, market macro driving it, pushing down a little bit lower, then I think a new range is pretty good time to buy. I saw it the last time you looked at the video, it's at $248. So that just gives you the idea of how much have been dropped since then. And then also this is a 6 months chart rather than a month one illustration, because just want to show you the volatility of Tesla stock. But again, as it get under closer to 2025 and they continue to create more model with cheaper price, it all depends on fuel energy whether they're going to be high or not. Lately, um, the oil prices, WTI, have come back up to $78 a barrel. So it is compared to a high end of 90 plus. It's still a pretty huge job. So that's why you don't hear the market talk too much about electronic vehicle. You always hear them when the oil price is high, right? So the fuel price is high. Therefore, it's more for economic incentive to buy electronic vehicle. But regardless, countries such as Europe and China, they make it very clear that they do want to be green environment. In fact, the seven big companies have get together, talk through about futures of economic growth, cooperations, and also addressing all the all the environmental event. So it will be, who knows if they will talk through it and focus about the policy and reinstate the timing of the how to go green. So next one is this is the next one, don't have a graph, but bowling. So bowling has encouraging news in last month with expanding sales and back on track. However, if for those who hear the news, it's all a big hit with bad news about issues and the jet investigation going on. Despite I'm a small investor, I'm just very disappointed with their management. I think they want to change the management with the new CEO and trying to make the cultural change, but that's not enough. While the investigation is going on, most people know that. I mean, it's all about cut the corners. We're trying to save costs, and you also have a trade ops, and in that case, it probably make a bad decision, right? Management bad decision. So it means the right balance between the cost and safety you have failed. So just like other company, there's always risk of offshore and having work done by third party. So there should be no compromise on safety, right? I want to be very clear and thinking, if you are the person who challenging yourself, ask, will you fly and sit on the bowling jet? Even though I'm a supporter of bowling at home, they start saying no, this has to be dealt with and very seriously to deal with. I think that is the culture of bowling, really need to change quickly. Other companies hopefully can learn from this lesson, right? So there's a lot of companies also trying to make more money by cutting corners, and that is really not a good thing to do. So that's why there's regulation, right? If you think about it, but all it is just always finding company what does it doesn't really do good for consumers. So that is really also need to be changed in my opinion. So pandemic is over, so the strength of balance sheet is a focus to improve and compared to the historical price of bowling. Again, pre-pandemic it was a strong $400 plus, and now we're pulling back to 100, $205 lately. And now honestly, that news struck, it was very quick. In a day, it dropped 5%. So within like a week, you're almost 10% drop of the share price. So it is really big impact. I don't think it's over yet because it's continuing investigation. So we see what kind of news can come up. If it's possible, obviously the price will rebound, or people seems to be very busy to forget, right? But this is still a very fundamental. I still think it's a good company buy. But again, there's a lot of management change need to be done and really reshape the company, the focus, the strategy. And again, sometimes it is more expensive, but when at the same time you sell to somebody, you make profit out of it. That's a spread between your cost and safety. It should be part of the cost in consideration and no compromise again. The other stock is Pinduoduo. I will hold and wait on the relationship between U.S. and China and potential influence of the U.S. elections. This will impact policy and can hinder the growth of this company, because people who have heard about Temu, TUMU, which is our brand Pinduoduo, is going pretty well in U.S. right now. It seems to be really going to be a next competitor with Amazon, Walmart. But then again, they can always have policy that they stop from the company could operate in the US. You just don't know. There's always a risk there, right? So we have to watch for that as an investor. The stock is trading, again, it was so crazily enough that it was 200 some dollars compared to the listing of time 20 something, right? If you would have bought like a bought some at 30 plus and then you sold at $100 or $120, I mean that's just really a really much better than XPEV or other stock tell you how many times a return within a year, right? So while Chinese economy is on challenge, that's actually just like dollar store here. It's better off because people are going to be buy their stuff because they really have a good existing infrastructure sales and marketing strategy. So more people will buy their items. I heard a lot of good thing about my friends about Pinduoduo in China. So I think this stock will continue to grow from a sales revenue perspective. But again, fundamentally, if there are no geopolitical risks there, things are going well, then the stock will continue to fly. My highlight today, however, is this last piece of the chart that you can see. You probably can tell which stock it is. This is XPEV. So if you don't want to buy Tesla stock and think it's overvalued, the other one to look at XPEV. This stock, when they go IPO, it was about $14 plus, and then you jump off $17 to $21 next day on the week. It was going as high as just like Neo, right? All these stocks were competing, going up and stressing up to 70 some dollars, and you drop as low as like $7, around $7. So it's really a good time to look at it. There was strong momentum in fourth quarter from an $8 lish and going all the way back to $16. Now it come back down to $9. So it's a good time to watch for this stock. And I think this stock will probably create momentum as it created close to EV 2025 visions. So and also the green environment push. So I sold it at $14. So I probably will buy back around this level now, just that you know. And I think recommend a buy right now for this stock. So and for airline company, like United Airlines is at $43 at this positions right now, so you can kind of look at it. I think it's below $40 will be good opportunity to buy in target price for $50, 50 to $52 ranges for a year. Thank you very much. And if you have any question, feel free to email to me at c15 at yahoo.com. Have a great and wonderful weekend. Thank you.